Congratulations! You are watching the one show today featuring no discussion whatsoever of the royal baby or Anthony Weiner. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Earnings taking center stage once again on Wall Street. The Dow Index getting hit on several fronts, but especially by Caterpillar, which had a less than awesome quarter. More on that in a moment. But first, joining me in studio, Jason Moser and Matt Koppenheffer. Guys, our top story today, Apple's second quarter featured record iPhone sales and a share buyback to the tune of $16 billion. For context, that amount is more than the total market cap of either Nokia or BlackBerry. Pretty good quarter all in all. What stood out to you?
Yeah, not a bad quarter. I tell you, I actually kind of like the fact that Apple's earnings season now, those quarters have kind of taken a backseat to some other companies. They're not such a big deal anymore. And I feel like maybe Apple will be able to sneak under the radar and bring some new products into light. And that's really what they have to do that they're not doing yet. I was very concerned, I think, with the drop in iPad sales. I mean, 14% drop is significant for a pretty amazing device. But the replacement cycle there isn't like it is on the phones. Cheaper products for Apple means lower margins, and they definitely saw a hit to margins as well. A lot of reasons to be concerned, but it's still one of the most innovative companies out there, and I think we have to give them a lot of credit for that.
We do, but you think they need to innovate a new hit real soon?
I do, but first I'm thrown for a little bit of a loop. I thought we were going to talk about the royal baby, but as long as we're talking about Apple, the three words, amazing new products. That's what Tim Cook said in the press release. This was a fine quarter, but I don't really care about this quarter. It's all about what are they going to introduce in the fall? What are they going to introduce in 2014? It's a hits-based business. If they can do that, investors are going to be happy, and this quarter won't even matter.
Shares getting a nice little boost today. What do you think of the stock right now in terms of its valuation?
Yeah, I still think the stock is a good deal today. I don't think it's dirt cheap, but I think it's a fair price for a company that we don't really know what it's going to bring to light yet. I think that they pay a nice little dividend. They're going to buy back some shares. It's a good holding. Really, it all boils down to that innovation factor. Again, it just is a matter of how much time is going to pass by before they bring something new to the table.
Okay, let's get to some of the day's movers and shakers. Pepsi's second quarter profits rose 35%, and unlike Coca-Cola, they did not appear to have a big problem with the weather. The snack division getting it done once again. What do you think of the whole notion? You got people out there saying, hey, this is doing so well, they got to spin it off.
Yeah, I think there are advantages to having them both together. As a shareholder myself, I think I'd like to see how it would work out if they split the two and they had a focused snack company and they had a focused beverage company. But, they're going to keep it together. I'm not counting on that. Like you said, the snacks are doing well. Emerging markets are doing well. And you know what? Mountain Dew is doing really well. Talk about extreme.
Shares of Ford hitting a 2-year high after second quarter profits rose nearly 16%. Dare I say, are we finally turning the corner in Europe for Ford?
Don't jinx it.
I don't want to jinx it.
Don't jinx it. I don't know. I mean, yeah, there are a lot of positives to take away from this. I mean, Europe seems to be turning a corner. Certainly conditions in China are much better, and they've built out a lot of production and distribution facilities in China here lately. And North America continues to do very well, especially with pickup trucks. I can't help but think there's maybe a country song in here somewhere. But, I mean, that's the big deal, right? We look at market share. Ford's picking up market share. GM is losing market share. Alan Mulally has done a lot with his company to set them up for success so that when he steps down next year, I think they have a lot, investors I think have a lot of reasons to be optimistic about Ford stock.
Caterpillar's second quarter profits fell 43%. Their margins contracted and the company lowered guidance. Was there any good news?
I think the good news is that it's still Caterpillar. This is still the premier brand in heavy machinery around the world. And when we look ahead, when we look at the dynamics of the emerging markets, when we just think about in the U.S. even, the construction industry will eventually pick back up. We're seeing some reinvigoration in the housing market and that sort of thing. This is going to be a relatively short-term thing for Caterpillar. In the big picture, this is a cyclical downturn or a cyclical blip. I think weakness in the stock presents a buying opportunity, if nothing else.
And finally, shares of Panera Bread getting hit today. Second quarter profits and same-store sales both came in lower than expected. How bad is this? And if it's not all that bad, is it time to buy on the dip?
Well, Chris, I hold Panera shares. I'm a little bit disappointed because I was thinking if they knocked the cover off the ball, I was going to take you guys to lunch. I just going to have to wait till next quarter. In looking at the quarter, yeah, they whiffed on earnings, they whiffed on revenue. Comps are obviously not getting it done, and so there are reasons to be concerned, I think, for short-term investors. However, when you look at this company, they are setting themselves up for long-term success. I like the move to catering. That's viewed as basically incremental income that they wouldn't have gotten otherwise, and it continues to grow. And they've also added a significant number of My Panera loyalty members. They have 14.5 million now versus 11 million a year ago, responsible for about half the transactions now. So all in all, no, it wasn't the best of quarters, but I do think this is a company that has a lot of success ahead of it, and investors ought to keep an eye out on it. Today could be a decent buying opportunity.
Okay, that's going to do it for Wednesday. Let's look ahead. Matt, what's a stock you've got on your radar?
D.R. Horton is up on deck to report earnings. We've seen interest rates come way up. What I'm going to be really interested is to hear from their commentary. I don't think we're going to see too much of an impact from the past quarter. We've already heard from Lennar, KB Home, that the last quarter looked really good. But looking ahead, are home buyers being affected by these higher interest rates? Are they slowing down in terms of buying? The housing sector is going to be a really important part of the recovery if this recovery ever really comes in full force.
Okay, Jason, what about you?
Yeah, Under Armour reports tomorrow. They're responsible for these awesome flops that I have on here. Just a really fun company to follow. I think this is the Nike for this upcoming generation. I'm going to follow just organic revenue, see how that's growing, pay attention to inventory levels, make sure they're not getting out of control, and paying attention to gross margin to make sure they can maintain some pricing and don't have to resort to big fire sales to move inventory out the door. But I think this is just another really exciting company to keep an eye on for the next 5 to 10 years, and I think investors would be wise to keep an eye on it.
College football season getting ready to start up. We'll see some bright new uniforms.
Cannot wait.
Oh,
All right, for Jason Moser and Matt Koppenheffer, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal